Alright, what's good, y'all? This is your boy Jay Devar back at it again with another video. In this video, I'm gonna be analyzing the price action last week in the S&P 500 last week. So yeah, without further ado, I'm just gonna go ahead and get into it. So basically, as you can see right here, we have some bullish price action, but we have a bounce off of this bearish, off of this ICT bearish breaker block right here. And basically all the breaker block is basically a failed order block, right? So as you can see right here, price came and took this liquidity down here, these lows, ran these lows, and took off. Now there was an order block right here, and we're on the daily time frame, by the way. So there was an order block right here. This would have been a bearish order block if price would have came, tested it, and basically, fell through for lower prices. However, that wasn't the case. So as you can see, price ran through and closed above this the last bullish candle right here before this moved downward. As you can see, price ran upwards and closed above it. So basically, this is a failed order block. So this is considered called the ICT style breaker block, bullish breaker block, right? So as you can see, price came up, came down, and retested this area before a few months ago, actually in July. Since we're on the daily time frame, then the moves are gonna take a long. Since we're on the daily time frame, moves are gonna take a bit longer to form. But as you can see, the reason why I like using breaker blocks is because that it's basically because that these are areas that price is likely to retest back to, or the market is likely to reprice to, and then possibly take off and head higher. As you can see, that's exactly the case of what happened here. And as you can see, price ran to take the buy side liquidity that was resting over here from the months of June. So I'm gonna go ahead and mark that right here. Shift up. I'm going to do that. Oh. Template. Buy side. Yay, there we go. Alright. So, with that being said, as we go further into it, so as you can see, this level right here, and honestly too, there's a lot of other breaker blocks also, but ideally, not every breaker block is going to be successful as a repricing or retest level. So it's all also you have to imply that or apply that element of patience too, of waiting to see what price action all like does. Because as you can see here, back in July, price came, tested the level, and just took off. But as you can see here in September, price actually dug a little bit more into this breaker block right here, to this daily breaker block right here. So it's always that level of always that element of applying patience when you're looking for your setups. So as you can see right now, I'm actually anticipating price to possibly most likely head back up here to this level. Right, this is another breaker block right here. I'm anticipating for price to head up into this level. And not only is this a bearish breaker block, this is also a bearish order block right here. Mark this. So this right here is also a bearish order block right here. Yeah, so this is also a bearish order block. So I'm anticipating price to possibly come into this level and make a small rally down, and also make a small rally here and head up higher, and to dig into this bearish order block right here and possibly head lower. This is also a fair value gap right here. So like a lot of these elements or concepts like blend into each other. As I'm gonna show you right here, like this order block is sitting in between a previous fair value gap on the daily time frame. So, and this fair value gap has already been tested. And but yeah, so like I said, I'm anticipating price to head up into this level right here on the daily time frame and possibly head lower and take out some more liquidity to the lower side, take out liquidity, sell side liquidity that's formed as the market is rallying higher on the daily time frame. So now I'm gonna start breaking down into some basically back testing some trade opportunities that that you could have got into last week. As you can see here, I did a couple. I'm also gonna get a funded account pretty soon. I feel pretty comfortable with the ICT concepts that I've learned about. I still watch his videos to this day, but yeah. All right, guys. So now we're on the hour time. Now we're on the hourly time frame. So I'm gonna break this down to you right here about why this is actually I back tested and did a video on this trade opportunity right here last week actually. So I'm going to walk you through why, basically just a recap of why I did this opportunity, because as you can see right here on the hourly time frame, there is a bearish breaker block right here, ICT bearish breaker block right here, as you can see. It's probably cleaner on the floor actually though. But as you can see, this is a 1 hour breaker block right here, because this is the last bullish last bearish, my bad, the last bearish candle before price rallied and took off, and then price eventually fell through it, right? So you had that, and also price came up and took the buy side liquidity that was resting over here, right? So this right here basically tells me that we're not really going to expect higher prices just yet. The reason why is because when price comes and takes, this is basically called a false breakout, on the hourly time frame. They did a small false breakout. As you can see right here, price broke above the highs or the buy side liquidity that was over here. So basically the market took those orders that was resting up here and started, in the big banks, institutions, they started putting in their sell orders because they filled all these orders in, so now they want to take price lower at a discount to another discount level. So as you can see right here, price came down and tapped into these lows right here and formed some equal lows, some relatively equal lows. It doesn't have to be, they don't have to be exactly the same, but the point is it came here and formed, this is another form of sell side liquidity, these relative equal lows right here. So that came down and happened, and then price came back to retest this bearish order block, this bearish breaker block right here. So price came to retest this level right here, and as you can see, price began to take down, or price began to make its way downward to tap into this sell side, or take the sell side liquidity right here, right? And as you can see, this was part of the trade breakdown that I did last week, or the trade opportunity that I broke down that you could have took last week. I would have took it too if I was trading a real account right now, but I'm actually just practicing on demo. And like I said, I feel pretty comfortable now with getting a funded account earlier. But so you can see right here, price came down, took the sell side liquidity. He said on average that the market, when it takes, or when the big banks, institutions, when they take sell side liquidity, when they're making runs on liquidity, basically relative equal highs or equal lows, it said that they usually run for about 20 pips or less. He said it usually makes a 20 pip run on the liquidity before eventually making its way my bad before eventually making its way back up, and you start to see higher prices. In this case, 20 pips, roughly 20 pips below the sell side liquidity right here. And as you see, we start seeing some bullish price action. You see all these bullish candles right here, back to back. Right. So you start seeing all these bullish candles right here, back to back. This right here alone is an indication, right? An indicator of that we're about to see a shift in market structure. As you can see, this high right here. This high right here closed above these highs right here. You can even move it up here if you want to too. Either way, see price close broke these highs right here. I personally like to use this one right here, this area right here, because that looks a lot more cleaner. You know, you can use the wicks if you want, but I mean it's not really necessary. But as you can see, price still closed above this wick right here. So when you see a pattern like this or a price action like this, you can almost guarantee higher prices, right? Because as you can see right here, this right here is a new dealing range. Let me go ahead and get rid of this. But you know, just remember, y'all can write that now. When price makes a run on liquidity relative equal lows, it usually does 20 pips before it takes off again or shifts the other direction, shifts the trend. If it goes more than 25 pips, then you can really expect a continuation of the trend. So you see right here, price came down here, then you could really expect, or you would anticipate price to just continue to head lower. But that's not the case here. It went 20 pips, and then it started. Went 20 pips, you can see right there, 20 pips. It started working its way up. They formed this bullish pattern, all these bullish candles right here. So this is a dealing range. How you can handle this, you can take a fib, boom, measure that out. So the lower this candle to the high, this candle right here, as you can see, it came into the 786, 618, 705 level. Actually gonna keep this fib up because I'm curious about something. Actually, nah, I'm not gonna do too much of the fib in this time, but this is a way you can trade it, or this is a way you can look at it, analyze it, break it down using this, taking the fib and measuring out the low and high of this range. You can also use the wicks, it doesn't really matter. Using the bodies of the open and close of the candles gives you a preciser entry, whereas like you use the wicks, as you can see right here, still relatively the same kind of entry. But you know, just if you want to be more about precision and getting in at an exact price or a more precise area where you can have a better risk to reward, then use the bodies of the candles. Use the open and close of the candles. But all right, so getting back to it. So basically, with this dealing range right here, as you see, price went up, broke these highs, or broke these short-term highs right here. This is a dealing range. So when you see a pattern like this or price action like this, be on the lookout for a retracement lower, somewhere into the dealing range. As you saw in the field, when this was the 618, it's in the 70% level. And so basically, anticipate a retracement into the dealing range, and then a rally higher. And you can see that's exactly what happened here. And this is what you anticipate. Not saying this is going to happen every single time, but this is what you anticipate. So I'm gonna come down to the 15-minute. We're actually gonna break this down over here. All right, and this is how I trade. This is the Asian session range right here. And the reason why I use the Asian session range is because in Asia usually forms the high and the low of the day, of the next day. That's usually how it goes with the Asian session. You can see right. So the Asian session I have set for, this is basically 5 o'clock, but this is Sunday open. No, this isn't Sunday open. It's supposed to be 5 o'clock, but so I have it set for 5 o'clock all the way to 1 a.m. As you can see right there, because 5 o'clock the U.S. markets close, the banks are closed, and then this begins the Asian session where we have the Japanese, the Australian, and the New Zealand over there. Those currencies over there, they're open for trading, as you can see. So that being said, as you can see right here, over into the 1 a.m. session. At 1 a.m., this basically starts to transition into the London session. So the London session is like 2, 3 o'clock, all the way to like 4 or 5 o'clock in the morning. And this is where I begin to trade. right here at 7 o'clock, the New York session kill zone. I learned from ICT, so I get in here at the 7 o'clock, the 7 a.m. to 10 a.m. New York kill zone session. This is where I'm looking for trade opportunities right here, based off of the price action that happened over here in the earlier hours. I'm looking at this to see what I should be looking into, getting into. So, also the reason why I can look at this and tell that like there was gonna be some more bullish price action is because remember this green breaker block right here. This is the daily bullish breaker block right here. So the reason why I can look at this, if I was looking at this, because I didn't trade this, I'm just back testing. But the reason why I can tell that there was going to be some more bullish price action is because with the fact that this is a daily bullish breaker block, and as you can see right here, it came and took the sell side liquidity over here. I can look at this, and if I would have been looking at this, I would have been like, okay, the market probably wants to come and dig a little bit more into this daily bullish breaker block, which it actually did. Remember, as we measured over here earlier, the market came and took this sell side liquidity right here. So this was roughly like 20 pips right here below the sell side liquidity. And as you can see, price started to rally and make its way back up. Right, came down and tested the area again, but this is still relatively 20 pips. And as you can see, price rallied up and took off from here. And this is that same dealing range that we looked at on the hourly time frame. So now with this being said, so I'm gonna go back to the hour really quick because I want to mark something. I want to mark the high and low of this dealing range from earlier. So boom, boom. Now we go back down to the 15 minute. See right here. Boom, look at that. So it might not look that clean on the 15 minute. Actually, oops. Alright, so I'm gonna use that high. And in this case, I'm gonna bring it down here because this is the lowest close of the dealing range. As you can see right here, if you wanted to take a optimal trade entry somewhere, you can see right here this 70% level, the 618 level. This, as you can see right here between the 618, well, basically all in between here, the 50% to the 70% level, you have a bullish order block that's resting right here. And so if you wanted to take an optimal trade entry, you could have well done so. All right. That's probably what I would have done looking at this if I wanted to take it solely on the 15 minute. All right. Put our stop loss below the low of this candle right here. So we have a 7 pip stop loss. Right. So right here, and basically you can expect the market to, or you can set your take profit for the highs over here. And remember, this is that dealing range that we marked on the hourly time frame. So this is that dealing range that we marked on the hourly time frame right here, this box right here. So we enter here, you set your limit order or market execution order. Here you have a 7 pip stop loss. Take profit is the high of the dealing range because we're basically anticipating price to break above this range and head to higher prices, to head to higher areas of liquidity. In this case right here, price came up to test more of these order blocks that are resting up here. Not order blocks, these fair value gaps that are resting up here. So you have a fair value gap here, and you have another one here. All right. Now in this case, I'm not really even looking to trade anything over here, or looking for shorts over here, because these are bearish fair value gaps. Like these are fair value gaps. To where you anticipate price to come up and basically head lower. But I'm not focusing on what's going on over here. I'm focusing on what's going on right here, right? Because I don't know what's gonna happen. I don't know which fair value gap is gonna tap into over here. You know, you can only figure that out when it actually does come back to that area, and when it does get back to that area, then you can make a decision on what you want to do, or you can analyze the price action and then go off of, okay, so based off of this, what could possibly happen next? All right. Ooh, my bad, I'm coughing. All right, but yeah. So this is one way you could have traded this. The optimal trade entry that you learn. Sorry. Ouch. Sorry about the coughing. This is one way you can trade it here. The optimal trade entry back into this order block right here. Also with the help in the measurements of the Fibonacci retracement tool right here in the dealing range that we have marked. So right here you're looking at basically 1 to 3 risk to reward ratio. You could take a few pips or so. But yeah, it's basically one way you could have traded this. Another way is because I didn't really see anything that I really liked on this 15-minute time frame as far as like if I'm looking for fair value gap entries. If you don't see anything on the 15-minute, all you can do, you can basically scale down to the lower time frames. So you can scale down to the 5-minute or the 1 minute. I personally do the 5-minute a lot more than I do the 1, but and basically right here on the 5-minute, I still don't really see anything that I like. I mean, I see that there's a out of this order block right here that's on the 15-minute. So this 15-minute order block that I have marked up right here on the 5-minute, you can come down. You can see that there's another bullish breaker. There's another bullish order block resting right in here in this area right here actually. And price came down to test this area right here, to test that bullish order block right here. Yes, the price came down to test that bullish order block right here on the 5-minute. Yeah. And so although I personally wouldn't have been looking for this on the 5-minute time frame, now I can scale down and look at it and see like, okay, now as you can see right here, this is the 15-minute entry. You can scale down to the 5-minute and you can see that there's a bullish order block resting right there on the 5-minute. If I'm managing my trade and I see this, and I see the market tap into this level right here, tap into this bullish order block right here on the 5-minute, then I'm not really, while I'm managing this trade, I'm not really worried about my stop being hit, because most likely this is an area right here that's gonna provide, like, that price is most likely gonna reprice off of and head higher into all of the buy side liquidity that's resting above here. I mean, like, look at all this. This is just too clean right here. All of this is just too clean right here. All right, all of that. So that's one way you can look at it. I still don't really see anything that I like on the 5-minute time frame as far as fair value gaps go. I mean, there's a little tiny one right here, but I necessarily don't like those. But I would have been anticipating higher prices anyway, because as you can see, the market rallies. It comes into the level, rallies, and breaks the short-term high that's right here. So it breaks above this. I guarantee you scale down to the 1 minute. This is gonna be like some like buy side liquidity on the 1 minute, or some relative equal lows on the 1 minute. It comes and breaks above those, and yeah, so you see breaks up above the short-term high right here. So this is another dealer range in itself. Although this is a bearish fair value gap right here, we don't care. I'm not really paying it. I'm not really focusing on this because I'm already expecting or anticipating higher prices. So I wouldn't look to go short here or be worried about this because based off of everything else that I've been analyzing, I just said, we're anticipating higher prices, not lower prices. Yeah, price came in to fill the fair value gap right here and head lower into this dealing range that was formed. And also this is another bullish order block in itself right here. Mark another one. This is another bullish order block. So I see back-to-back bullish order blocks being formed. I'm definitely anticipating price to hit higher. And that's exactly what happened here. Right? So, yeah, guys, that's a couple ways that you could have traded this. Most likely, if I was looking at this real time, I would have been looking to trade, would have been looking for an optimal trade entry because I didn't really see anything too clean on the 15-minute. And I don't see anything too clean on the 5-minute either. So I most likely would have been looking for an optimal trade entry using the Fibonacci tool right here. And then I would have seen that, you know, this bullish order block right here into this level. Then boom. I'm about to wrap this video up shortly because I don't want this to be too long of a video, but I want to see if I see anything on the 1 minute. Because I usually like the fair value gap entries more, but I have 3 of the different setups that I look for. One here that I just showed you, the optimal trade entry, and there's also the fair value gap entries. Okay, so right here on the 1 minute, oh God, look at this. So right here on the 1 minute, right, and this is all going on. This is all still going on while in the New York session kill zone also. So it's from 7 a.m. to 10 a.m. All of this price action is going on. Right, as you can see, this is our first entry right here at 8:06. Right, and then the market really finally took off when took off around 9:13, so around the 9:30 time, where this is the 9:30 a.m. is the actual index market open. So that's where you can start to see like the rallies and the crazy price action going on. That you can see right here, 9:30, price took off. 9:30, 9:31, price took off in that time at the market open, the index open. So on the 1 minute, this is beautiful right here on the 1 minute. I'm actually going to delete this really quick because we don't need this anymore. But on the 1 minute, you can see, I'm going to highlight this area right here. Remember what I said earlier. Anytime you see this price action, this type of price action right here, right? Anytime you see this type of price action right here. Right, but anytime you see this type of price action right here, remember what I said? We saw something similar to this. This is basically what we saw in the 15-minute. Huge rally, breaks above, right? Short-term lows, or short-term highs, my bad. Short-term highs, or this breaks above these short-term highs right here. This is a dealing range in the 1 minute, so we can anticipate price to hit to retrace and hit higher. So in this case right here, not only did it break above short-term highs, but it also did what? This right here, my friends, is a bullish breaker block. There's a bullish breaker block in this area right here. As you can see, I'm gonna mark the entire thing. There's a bullish breaker block right here. Look at that. Side breaker block. Look at that. Beautiful. Now, I personally use this candle. You can also use this candle right here because this is the highest, the last highest bullish candle or bullish close. So you can also use this candle right here. And you see it's still pretty accurate. You can use this candle right here or you can use this candle. Either way, I probably will put the stop loss somewhere like around here, like below this candle right here. right? But not only is this a buy side breaker block, there's also a fair value gap right here, right? And honestly, in a lot of the fair value gaps, you'll see the breaker blocks, right? So as you can see, there's a fair value gap right here. Oh, I did something wrong. There we go. As you see, there's a fair value gap right here, also paired with a buy side breaker block. I see this. I'm 100% confident in price heading higher, right? Because this is just double confluence here, right? Anytime I see this, I feel 100% confident, right? So you want to enter the trade. Like I said, you could have used this candle here, or you can use this candle here for more precision, because this is the highest close. This is the last bullish candle with the highest close before price, basically took off and broke above it. So you can either use this one because you can use this one because this one was a more clean. This was the more obvious bullish order block. The price broke above it. So this was the last up candle before the down move. So you can use, I personally would use this area because it's more cleaner. But if you want more precision, then look to the left and look for the highest close of a bullish candle. But so on this trade right here, we enter. You see right here, with precision like this, you can have a 1 pip stop loss. All right, you have a 1 or 2 pip stop loss if that makes you feel more comfortable. I know some people like to set it exactly here, but that you see right here, that came kind of close, so I like to give myself a little more room. So I probably would have set my stop loss either right here, about 2 pips, or you can use 4, or you can come down here if you want. It doesn't matter. Whatever risk adverse you're comfortable with. So I would have been comfortable with a 2 pip stop loss. Come here, you see we're already at a 1 to 4 right here, and we would have been targeting the high of this 15-minute, right? So remember, we've been targeting the buy side liquidity right here first. If that's the case, target this right here. You see we're at a 1 to 6 risk to reward ratio, almost a 1 to 7. Beautiful execution, beautiful price action right here. And honestly, I can't wait to start trading this, trading these live accounts and trading these funded accounts with what I've learned from Inner Circle Trader, ICT. So yeah, there y'all go. This video has gotten kind of long. I wasn't expecting it to be this long, but there you guys go. And yeah, that is how I trade the ICT concepts that I've learned. And yeah, you guys please like and subscribe to the channel, because I plan on posting more videos. And let me know in the comment section, what y'all want to see. If y'all have any questions about how I traded or some of the concepts that I learned, just let me know in the comment section. But yeah, like I said, like the video, subscribe to the channel, turn on the notification bell, and I will see y'all in the next one. Peace out.